Welcome, this is Tutor Bismart and I'm welcoming you to my accounts revision class. So we're looking at an exam paper and it's coming from the topic business documents, okay, and the petty cash book, which is the impressed system. So this is the revision class, right? Looking at one of the exam question paper, and this is a paper. Let's get into it. Okay, so this is the paper. Right, so the first question is, write the answers in the spaces provided for each question or part of the question. And the first question of A says or reads, name the document given out by the business under the following circumstances. So if you're going to have a business, this is gonna happen to you, and you have to know the documents to issue. So the first one is, when a customer is undercharged, what kind of document are you going to prepare? Okay, so the document that you're going to prepare here is what we call a debit note. A debit note. Okay, so a debit note is a document sent to a customer when the business has charged them less money. So when you charge them less money, you're going to prepare a debit note. For example, let's say you sold goods worthy 500 kwacha, then on your invoice you mistakenly write 450. So the difference here is a 50 kwacha. So this 50 kwacha is the one that you put on the debit note when you prepare to give your customer. This means their debit or their debited account will increase. They have to pay more money to you as a business. Okay, so basically that's the document you use, and we continue. Okay, so second question, when the business sells goods on credit. When you sell goods on credits, what document are you going to prepare? When you sell goods on credit, what document are you going to prepare when you sell goods on credit? So the document that you prepare here is the invoice. The document you prepare here is the invoice. That's the document you prepare. The invoice is a document sent to a customer when goods are sold on credit. All right, and this document, it will show what? The goods sold. It will show the goods. It will show the goods sold. It will show the quantity. Okay, it will show the price. So this is a what? An invoice. That's the document you send to a customer when you sell them goods on credit. Okay, we continue. When the business pays out money from its current account. Okay, what document are you issuing? Remember, this is the business paying money out from its current account. And where is the current account? In the bank. So you're gonna use a document called check. So here the document is check. You're going to prepare a check. Okay, just a minute. You're going to prepare a check, and a check is used when a business pays money from its bank account. This is when you prepare a check. So for example, when a company pays rent of, let's say, 2,000, okay, using a check, the landlord deposits the check at the bank. You get the point? So the check is equal to bank payment document. So that's the document you use. The examiner might change here and there, but you need to know what is happening in the circumstances for you to identify the kind of document that is needed. Okay, we continue. And number 4, when damaged goods are returned to the business. So sometimes you sell goods to a customer and they discover that the goods have been damaged. What kind of document are you going to prepare? So here, the kind of document that you're going to prepare is what we call a credit note. A credit note. It's a credit note, okay? And a credit note, number one, is issued when goods are returned by a customer. The reasons of returning the goods can be due to damage, right? The goods are damaged, okay? What other reason for the good to be returned? Overcharged. If the goods are they're overcharged, okay? Sometimes the examiner will ask you some of the reasons of the goods that have been returned and why you need to prepare this credit note. Okay, let me write it properly. Credit. Okay. Credit note. Okay. One of the reasons when the reasons to the goods being returned, you can say wrong goods that have been supplied. Okay, wrong goods that have been supplied. So basically, these are the documents, and you have your 4 marks there. There's no need to lose these marks, guys. There's no need to lose these marks. You must hammer them all. Okay, so these are the document: debit note, invoice, check, and credit note. Okay, so let's continue. B question. The following information relates to the business of Nganguluma for the first week of October 2017. Okay, so October the 1st, the cashier received cash of 2,000 at the beginning of the week. These are the transactions, okay? These are the transactions, and we are told you're required to prepare Kanguluma's petty cash book for the week and restore the interest. When we talk about the interest, we're talking about the restoring or bringing back, or rather coming back to the original amount you were given. You see, where you make sure that you calculate your expenses, how much money you spent, then the difference of what you spent, okay, you add it back. All right, so we need the difference from what you spent, and that difference is what we need to restore the interest. So the first thing is to identify the expenses, and these here are our expenses. Okay, so let me quickly go to the table. This is a rough table I had to draw. Okay, so here we're going to write our debt. Let me use a different pen. Here we're going to write our debt. Okay, and okay, 1 2 3 4. 1 2 3 4. Okay, here we're going to write our, let me use a different pen. We're going to write our details. Okay, and then here we're going to write voucher. Okay, and lastly amount. Okay, so we are restoring the interest. We want to get back the amount we received at the beginning of the week. Okay, so the debt. Okay, so the debt here, October 1st, details, we received cash. Okay, say cash. Okay, just a minute. You can say cash. Cash received. So small. Let me expand it a bit. Okay. All right. Cash received. So here is our cash. cash received. Okay, how much was the cash? We received 2,000. Okay, and now our expenses. We have bus fare, our voucher. Let's make it, let's say V1. We had the 20 from our question. Here the bus fare. Okay, second one, sugar, our document V2 there. How much for sugar? For sugar is 30. How much for boom? I mean, is this Mr. Lungu? The cash paid to Mr. Lungu. The cash paid Mr. Lungu. Mr. Lungu V3. Okay, the date here should be the second. How much? 400. Okay, you can see the date here. Okay, number 3, on the 3rd. And the 3rd, boom, V4. How much was boom? 100 kwacha. Okay, on the 4th, stamps, how much? 5. What was the amount? 50. Okay, on the 6th, pens. Okay, what's our V2? 6. Oh, here it was envelopes. It was envelopes here. Okay, on the 4th, stamps. On the 5th, envelopes. On the 5th is envelope. Okay, let me just rub this. On the 5th, we received envelopes. V6. How much? It was 19. And then on the 60th, okay, just write, I'll write it there. On the 60th, pens were bought. That was V7. How much? 180. Okay, and then the last transaction, or our transaction, was Cobra on the 7th. Cobra, which is V8. How much was it? It was 200. Okay, so these are the transactions here. So what is the total of our expenses when we add everything? What's the total of our expenses? Okay, what's the total of our expenses? What's the total of the expenses, the money spent? Okay, so our expenses, when we add everything, we are getting the money that was spent, 1,000 70 kwacha. Okay, and when we less it from our 2000, the difference is 930. Okay, so this difference is the balance we need. Okay, the balance we need, all right, to find the interest amount. Okay, so the cashier has to receive this money to be added to this for it to go back to 2000. Okay, that's what the question wanted you to do. So the cashier receives 1070 kwacha to restore the petty cash book. So this is the amount the cashier needs to receive. The amount that you spent, this is the amount the cashier has to receive. Okay, so we have come to the end of our revision. So this is the question, and thank you so much for watching. This has been Tutor Be Smart. It's bye for now.